Hi everyone, my name is Daniel Torsson, Equity Research Analyst at ABG Sundal Collier, covering the IT and tech sector. And for this presentation, we have BTS Group and the CEO Henrik Ekelund. Henrik is going to present the company for some 15 to 20 minutes, and then I will follow up with a 5-minute Q&A session in the end of the presentation. So I leave the stage for Henrik and his presentation, and I will disappear during the presentation. So go ahead, Henrik.
Thank you, Daniel, and thank you everyone for listening in. For those of you who only have 1 minute, I'll give you the summary. BTS, we're a totally global business spread all over the world in a miniature format with just under 2 billion SEK in revenues and with a long track record of profitable growth since we came to the market. And with quite a unique technology-based concept. That's the 1-minute summary. And to tell you a bit more, if we look at, go over to the next slide, our vision is to be the global leader in strategy execution. And what does that mean? So we work for the top 2,000 companies in the world, and we help them once they have a new strategy, a new initiative. We help them to train their people and to align their people so the strategy actually happens. And as we all know, it is tougher to implement a strategy than to design it. And that's what we're focused on and where we are a leader. And we have about 850 professionals around the world. And in 2019, 1.8 billion SEK in revenue. Now, looking at the next slide, you can see that we have a global footprint of over 30 offices around the world. Roughly half of our business is in the United States, about a quarter in Europe, and a quarter outside Europe. Now, looking at the next slide, at the market drivers, you can say that the more change there is in the marketplace, the more opportunities for BTS. And there are a lot of change drivers currently in terms of the changing technology, the change in behavior of consumers, the change in society values, regulations. There's so many changes. And the more change, the more business opportunities for us. Because when companies set new initiatives and new strategies, that is when they need our services. Now, looking at the next slide, you can see some of our customers. And as you can see, we work with clients among the biggest 500,000, 2,000 in the world. And what is pretty special is that our average lifespan with the customer is 7 years. So our churn is quite long and the customer loyalty is very high. Now, what do we do for these customers? Let me show you then 2 cases very quickly. The first case is a large European gas utility company. And they came to us and they said they had made research in their market. And the conclusion was that their customers disliked them a lot. It wasn't that they were just okay. No, they were heavily disliked. And they decided to get on a journey to become loved by their customers and also realized that this was not only a question about marketing. It was a question about the whole culture in the company that influenced how the solutions they offered, the pricing they offered, the service they gave, and so on. So they realized this is an internal issue. We have to work with this internally. And this is a big company. They had 2,700 managers. And we took all those 2,700 managers through a customized learning experiences, showing them what is customer centricity? What is it to truly care about your customers? And what does it mean for your business? It was a customized, very advanced learning journey involving simulations. And as you can see, both the customer and employee NPS grew a lot. The next case on the next slide is a globally leading industrial company. And they had a new CEO that we knew since before we had worked with him. And he came there and he concluded that the products were fantastic, but the profitability was too low. And the understanding of profitability was also too low. So he hired us to train many of his top leaders to really understand how to increase profit in the operation. And the results, again, profit has improved and the share price has climbed. And we have hundreds of these cases. And in fact, when you try to improve a company, like all our clients are trying to improve all the time, the most critical factor is the mindsets, the capabilities of their people. And that is what we help them with. The next slide tells you a little bit. You probably understood that we are, to some extent, a professional services company. We have consultants, we have trainers, but I want to point out that this is not a pure service business. We're a combination of service and product. We have a lot of products in terms of simulations, in terms of contents, in terms of special industry applications that we are reusing. So our clients are not only buying us like a pure consultancy, they're buying us and our service, our consultants and our services. Now looking at the next slide, so BTS, 18 years since we came to the stock exchange. I've been the CEO all the time. Even before the IPO, I was the founder and the CEO. And as you can see, revenues have grown a lot and profit a lot. In fact, the dividend that we gave last year and that the board has proposed again for this current year is 18 times higher than when we came to the stock market. And the stock price is roughly 11 times higher. So it's been a good run. We've grown revenues 14% per year accumulated, and profit measured in EBITDA 18%. So it's a long-term profitable growth. And let me stop there and talk about 2020, because 2020 is a totally different story. It's been a year with totally different numbers, but we have a very positive outlook for the future. Let me share, with us that since we develop people, we do a lot of that physically. Okay, we meet people in sessions of 25 or 50 or 100 or sometimes 2,000. And from March 1st, all physical deliveries have been canceled, everything. And that represented 70% of our revenues. So you can imagine that was quite a drama for me, going from all-time high in the stock price and a blasting full order book, and suddenly 70% is gone. And it happens just in a week. So we thought about very quickly, what do we do? And we came to the conclusion that 2020 for us would not be about maximizing profit. It would be about building for the future. We could have fired a lot of our people to maximize 2020, but what about all these people and their knowledge and their capacities and all their customer relations? We would have lost a lot. It's like tearing down half of the hotel just because it's half empty. It is not good policy, long-term thinking. And instead, we kept everyone and we said, yeah, we'll have less business, but let's take all our employees and focus on virtual. So let's try to take all our physical deliveries and put them on Zoom and other platforms and convince our clients. That's been an enormous undertaking. We'd never done anything virtual before this year. We trained everyone in BTS in this. We redesigned all our programs. We convinced clients to go virtual. And because of that, we didn't lose 70%. We lost 32% in Q2 and then 20% in Q3 because we've seen the market pick up during Q3. And interestingly enough, during Q4, even though Q2, we saw an enormous impact with enormous cancellations. In Q4, in the second wave, we are not seeing that because our clients, they already have a grip of how to run their operations now. In Q2, they didn't have that. And they're all now used to using virtual, and they're all thinking post-COVID. So the second wave has not impacted us. And in fact, we believe that although the 2020 numbers, it will be a profit, but much, much smaller than before, we see that in 2020, we've made the moves to virtual. We've kept our organization intact. We generated a lot of new clients. So we are extremely well positioned to take off after 2020 on a new graph. You see that beautiful graph of profitable growth, we have used 2020 to build for another beautiful graph going forward after this year. So I was asked to talk a little bit about innovation. So if you look at the next slide on innovation strategy, innovation is extremely important in our industry and becoming more and more important every year. And it's easy to go wrong when you innovate. It's easy to develop the wrong products, food that the dogs won't eat. How do you handle that? So we have 4 pillars in our innovation strategy. First of all, it's customer driven. We very rarely develop any solutions without having the first customer. And that means that we have validation. That means we have some financing. That means our project is much more market driven. And it means the project is also more efficient because we have a target customer and a delivery date. It's also decentralized. We have 850 highly educated people around the world. And I give them a lot of freedom. If they find customer needs and customers that are willing to pay and willing to commit, we allow them to develop on their own. And then we pick the best of what is created. And this has proven to be a very successful strategy compared to some other people who try to centralize all of this. They have one thing centralized, and that's the digital resources, because there's certainly scale advantages. And looking at the next slide, how did we handle this switch? This was enormous for us. 70% of our business gone. We realized that the only way is to go virtual. And we also think this is not only 2020. We realized that this is what's going to become big in the future. So how did we handle that? Well, first of all, we said focus. This was the only challenge. This is everything we did after March 1st. So 850 people focused on training, selling, redesigning, and becoming pro at this. And again, we didn't create one centralized team. That would have taken months to get going. We instead allowed our top professionals around the world to experiment. And then we have a tight communication. So we learned the best practices. Now we've been through this, and now we're centralizing back the best practices. A few words on our acquisition strategy. We have, during these 18 years of 14% growth, the majority has been organic, probably 90% over those years. But we have, in the later years, increased our speed of growth by acquiring companies. We have now the type of scale, and in our industry, there are so many small players, and with the global market and with the technology becoming more important, the smaller players are having a tough time. So we're getting a chance to acquire businesses, and we have a couple of purposes. It has to be either growing the service offering in a very logical way. So we find a product that we can sell that is connected to what we already sell. This way we got into assessment and into coaching. Secondly, getting into new markets. 5 years ago, I was not in Italy. We were not in Germany. We are now there because we bought organizations with 30, 40 people, one in Milan and one in Cologne. And we are now in those 2 big markets. We focus on small to mid-size. So that's 5 to 15 million euro. This means it's much easier to quickly increase the value of what we bought. It's easier to integrate, and it's less risk. It's very, very important with the talent and the culture fit, because we work closer. Now, looking at the slide, coming out stronger, we set ourselves goals back in March, where we said, okay, how do we make this year the platform for a long period of profitable growth? Well, when we end 2020, we said back in March, we're going to have a much larger customer base, which we have today. We're going to have a broader offering, which we have because now we have physical, virtual, and digital, a stronger organization. And even though we've kept the same size, we have exchanged some talents. There's always an attrition in the company, and in this year's market has been fantastic to hire great people. We also tripled our marketing budget. That was another decision in March. We realized now is the time to go get new customers. And we become much better at marketing also during the year. And looking at the next slide, the market outlook. So situation has improved during Q3, and this remains in Q4. We haven't seen a downturn due to the second wave. We believe physical deliveries will return when the corona restrictions are lifted, with some time lag. People will be careful, but virtual will stay huge. So instead of pure physical, we will have a combination of physical and virtual. We have a dividend policy where we give a dividend of roughly 50% of the profit after tax. And due to our very positive cash flow, we have this opportunity. And if you look at the next slide, you can see how our dividend has grown. And so it's 18-fold since we came to the stock market. And for the year of 2019, the board recently proposed to keep the dividend intact. We had a very profitable year in 2019. And due to a positive outlook going forward, the board has proposed to, in December, decide at the annual shareholders meeting and then distribute, if the shareholders meeting says yes, the same dividend. The next slide shows the 10 largest shareholders. So it's a combination of people who've been parts of founding the business and some major institutions. Most of them have been with us for a long, long time. Lannebo actually, all the way since our IPO in 2001. Now with that, I have done my 16-minute presentation and I look forward to questions.
Yes, excellent, Henrik. Thank you very much for a good presentation. I start off with a question. You are a global company, as you said. So it would be interesting to hear what you see around the world. How well has Asia, for example, recovered from the pandemic as it was affected earlier than other regions? What do you see around the world?
I mean, first of all, a couple of things. Number one, in Q2, companies cut everything. Now they are looking forward. They realize there's a life after COVID. They've organized themselves and they've got used to virtual. Enormous change. Observation number two, the market is still very split. There are some industries, airlines, hotels, etc. They buy nothing. There are some industries, tech, pharma, etc. They buy more than ever. And then there's a group in the middle that who are a bit cautious. But all of those are moving in the right direction. In terms of geographies, it's true. We saw the impact of COVID already in Q1 in Asia. So the 70% drop we saw already in Q1 in Asia. And we didn't really have the time then to correct that. But we've also seen Asia come back faster. And you can also see that in Q3, our region where Asia is part is actually the highest performing. So I think they are leading for what's going to happen in the other geographies.
Okay, that's very good. And then a general question. I mean, looking in the history, you have had the largest demand and the highest growth in periods post-crisis when companies need to change and adapt to a new future. And it has also been a potential driver for you in the coming years after this pandemic. Is that how we should see it? And also, can you say something on the need for your services for companies when they have their employees working from home? Do they have a higher need or a lower need to incorporate a culture in general?
Yeah, I mean, this is a very good question. I mean, as I said in the presentation, the more change, the more business opportunities for us. And the 2020 pandemic has accelerated change for many companies. It has also created challenges for many companies. Many companies have employees now that are quite exhausted after living by Zoom at home for a whole year. They have employees who are perhaps wondering, what's the current strategy going forward? What's going to happen to our company and so on. So yes, there is a bigger need than ever for companies to invest in their people. both because of the change and because of the challenges during the pandemic. So, yeah, there are, of course, a lot of uncertainties out there a year like this, but we see lots of market opportunities.
Do you see, for example, companies with a policy that their employees should work from home for a longer time? If we take Facebook, for example, they have said that their employees should work from home until the end of 2021. Do they show a higher demand for your products because they need to live with that for another year? Or does it change based on policy here? Or do they wait a year to invest when people are...
I don't think there's a difference.
Yeah.
Really. Obviously, if people are working from home, you're right. There is a bigger need for our services because you're less connected to your peers. So there should be a bigger need, theoretically. And I don't have the data to say if that's true, but it could be.
Okay, interesting. Then I have a question on edtech companies in general. We see that some of them are growing quite significantly during the pandemic, as they have software tools and they could do remote educational tools as well. Do you see them as a potential competitor in the future for some parts of your business? I'm thinking, for example, about the Norwegian company Kahoot, which just got SoftBank as a majority owner, and the share price has rallied during this year. Is that something that is a concern for you, or how should we think about edtech companies?
I mean, you're absolutely right. I mean, the companies in the educational sector that sell software, they've done fantastic in 2020. Whereas the people who sell the training, they've done really poorly. And I mean, if I compare with peers that are public, if we lost 20% of our revenues, they've lost 40%. So those two parts of the industry have done have had different outcomes in 2020. What we try to do with edtech companies, they provide platforms so that big companies can organize all the learning programs they have and organize all the content and make it easier for their people to get access to this. And they're not competitors. We need to cooperate with them. So we are building our solutions. We have several clients where the clients tell us, please make sure that your content is connected to Skillsoft or is connected to Edcast. So it's very important that we can connect to them technically, because otherwise we can lose deals. But so far, we do not see them as direct competitors.
Okay, interesting. Have you looked at some pure software companies to acquire during the pandemic, or have you rather looked at people's businesses, companies?
We bought 2 digital companies in 2019. I think, we are interested in digital companies and in more consulting-oriented companies. Depends a little bit what we find. Of course, it's a big market out there with many players, and people who have a lot of capital. So the way you succeed is to stay focused. If we go too far from our core, we will not be the best in the world. And the market is so big, so we can continue to stay focused and do what we do. Okay.
I think actually that was my last question. We only have 1 minute left of the session. So I think we thank everyone listening in to Henrik and BTS story. And thank you very much, Henrik, for participating in our seminar today. And I think that we will.
Thank you so much for inviting me, and thank you everyone for listening in. Okay.
Excellent. Feel free to reach out to either me or Henrik, of course.
Thank you. Bye-bye.
Bye-bye.